So let's talk more as we think now. Are we going into year end? What are some documents we're going to need? What should we be keeping track of as entrepreneurs and business owners? What are some of the things you recommend we keep?
So, of course, your bank statements are critical. You need to have all those receipts that you go out and have. So I always say to persons, once you're going out and you're spending, you keep a bag with you. Sometimes you forget. You put those receipts in the bag. They're on thermal paper. Try and get a scanner. I think it's less than 100 US for it, where you can actually upload right and you use your phone.
Yeah.
Keisha, keep every little paper, because sometimes we need an expense, and when we look, we say, hey, we can put this in as a traveling expense. It helps us with the classification. So I will say to persons, ensure that you have all the receipts that you go on the road and spend. We know we go to the mechanic, sometimes our mechanic, our friend. I also say keep an invoice book, because the tax office will tell you, you need to maintain your documents for 5 to 7 years. So there's no excuse for not having those documents. So what I tell persons, either keep a little petty cash voucher. I normally give persons that come onto KCLH after the consultation a little accounting package, which should have included a petty cash voucher and an invoice book. You go to the mechanic, you ensure that you don't leave unless he signs that. In charge of 15,000, 20,000 to do the repairs and maintenance. Make sure you have his signature on it. You would have spent that for maintenance. Don't say, Lord, me never remember how much we did pay him again.
Right.
Have that receipt and make him sign it. When you come to KCLH now, we roll out all the documents. So every receipt you keep all your bank statements. For the very wealthy people, we also need your investment statements. Why?
That's the people over here, the community.
Yes.
We spoke about that within our private clients. We spoke about that, our investment. So
Yes,
they're going to be reaching out to you, because when you're investing, there are certain things they need to provide you. So talk about the investment.
For the investment now, you know that there's an investment credit once you invest overseas. So I noticed that class before you speak about the US dollar investment, and you would have been telling persons, open the account. So it's very good to open the account, because there's a tax credit associated with that. A lot of the accountants don't know that. So you get the tax credit depending on the jurisdiction. There's an amount that you actually get a benefit from, right? In addition to that, there are certain interest income, which is taxed at source, which is the withholding tax. On the form itself, now they're asking you, okay, which investment you did get and which interest. They want to see those receipts uploaded. So you have to ensure that all those investment statements, you have those to give to your tax planner and your tax person. It's a must. We want to ensure that we are giving everything support, that we're not paying enough tax. It's a tax at source. We're getting our credit because we would have invested in wherever, Bermuda, Bahamas, Kenya, wherever it is. The US, we are getting a tax credit for that. We also ensure that whatever contracts, whatever leases, KCLH assists with a lot of lease when persons, particularly companies that are limited liability companies, they have an asset in their personal name, their individual name, but they now own a company. We assist you with ensuring that the lease agreements are in place, that you can actually take benefit and have that amount reducing your taxes as an allowable expense. So we say to you, ensure you have those agreements also, those contracts in place. For those persons that are doing the Airbnb and the rental income, the property side of it, ensure that you have your receipt for the repairs and maintenance done. John Brown did come in and touch up the place. You just pay my money. No. Use the receipt book or the petty cash voucher that I speak about, or insist on getting an invoice. Stamp paid on it.
Lady too. The cleaning lady must get a receipt.
Cleaning lady, everybody, do not be issuing cash and not getting a receipt, an invoice, something to support that. Even for those online payments, the classification of that, it's critical. Those persons that buy overseas and have that digital, the tax office is becoming so sophisticated. That is one of the new things that they're into. The digital footprints and all of that. They are having that. So ensure you have the documents to show that, okay, Although I did buy from XYZ online overseas, I did use it for the Mary Jane project, which it costs this. That correlation must be there. So the documentation to support your business, you go on the road and you buy gas. The attendant, they not like get the receipt, them, you know.
Yep. But I
Make
request
sure you ask them for it. Can I get my receipt, please? Then face good along. Ensure that you're having the receipt. One of the things that we do, Keisha, the toll receipts too. You back and forth with toll, you throw the toll receipt because you don't want whatever the reason.
Yes.
You throw the toll receipt. Hide the receipt if you need to be, and then go into the accountant. But at the digital cards, all of that becomes keep it on a legal paper. Paste it on for those who use when them call it credit. Ensure that you have every single solitary receipt and document there that you can produce and give to your accountant. You are a part of you have the health insurance. Make sure all of those receipts that you're paying.
See there. So yeah, touch on every facet, you know. And yes, I know there are persons who are watching that say, we never know. And this is why you get expert guidance. Because you can have somebody filing your taxes, doing that annual filing for you, and they're not declaring everything for you. Exactly, and you end up paying more than you should.
The other thing I want to touch on, Keisha, this is those credit card statements. A lot of clients don't know that there's a finance charge in addition to the charges. You know, right. We pick that up. So we look at everything. So those charges, the bank statements, the credit card statements, all of that is analyzed to ensure that nothing is missing. We also say to you, go out and there's a huge capital allowance to be gained from doing your tax filing. So you might have an asset that you buy and think of expensing it. We will say to you in that planning session, no, you have a capital allowance that you can get up to 40% write-off, depending on how you're classified in that tax year. Don't bother take the full amount in this year. Utilize that as another allowance that you can get. So the classification becomes very important of the records. What are identified as assets versus what are identified as operating expenses.
Get you an accountant that gets light up about capital allowance. Exactly. It's a very boring topic, but notice all that capital allowance. Yeah, me like you. I don't care about those things. I care about investment stock, but I like your passion because the thing is, you know, you touch on a lot there. You have people on Instagram, oh, they are floss. I'm a businessman. I'm doing this. I'm doing that. TAJ, I watch you. And yes, you are going to get a letter saying, we notice you are here calling yourself a businessman and we have no filing for you. We have no record of any company. You need to present yourself by this time.
So you touch another very important topic. So as I said, I would have known both sides of the tax office. So I'm able to provide that level of consultation. So I remember getting a client.
Actually, you consult to the tax office. Them call you.
Them call me. Right. Them call me and say, how we deal with this and that and whatever. So I had a client that came in. And so when I was trying to assist him, I would have called persons up there and said to them, they said, Keisha, there's a new thing going on. You know, when you have properties of a certain amount and then the tax filing is not matching, you then become a target now for them to drill down into and actually audit you. So I'm telling all my clients, make sure that know that we are filing the taxes and it look reasonable to the properties that you're getting. We do not want to give the tax office. We have identified properties overseas and all of that. Yeah. Remember, anything that goes through the tax nets, the stamp office or so, they have a copy of it.
Them a watch.
Yes. Right. So we have to know. And then we come and we plan and we say, hey, where you buy this year? We can put it on as an allowance or we can make it go through. So those are the sort of way you want it. Juggling for another, for whatever better word.
Yes.
But assist to make sure, say, you're not giving up too much.
Because the more you keep in your pocket, the more there is.
Exactly. The more you keep in the pocket. Check, not check. Right. We often do it right.
People out there are joking. So you're on Instagram, you're pretending with your business. TAJ is watching you. I had a client call me today to say they got a letter from TAJ and they have no idea how TAJ find it. They are watching because people are leaving digital footprints. As I said, they're out there showing that them traveling, go there, them do whatever. Them do whatever. Oh,
but Keisha, let me give her this. I got a client probably a year ago now. And how I got that client, when I called my people at the tax office and said, what happened? Them say, Keisha, I was at the party. I was buying the liquor. So they're into everything. I said, well, yes. So we have to be careful. And we have to have the professionals who know so that we are able to guide you. We are able to for you to properly plan. That you come and you're giving, you are actually building wealth instead of diminishing. We don't want at the end of the day, they have been watching. And because you have not been practicing proper tax strategies and planning, you fall into a trap.
Right. So let's take a question from Stephen. Hello, Stephen. So Stephen, future client of yours, I guess, saying, what advice can you give for a limited company that only has expenses for a few years, but they don't have any revenue? What should that company be keeping track of?
So that's a good question, Stephen. And you should be keeping track of that expense because, as you know, there's a matching concept. So what would happen is that for that period of time that you are not incurring that revenue, you actually have those expenses. As soon as you get that revenue, whatever it is, you then put in that expense for the period. So that is how that would
what he's saying is, I start a business, I'm running it with expenses, but no revenue yet. How does that work now in terms of filing? Do I still have to file? Does it work or what?
Yeah, man, you have to file, you have to file. So there are two things that you can do. You can actually put in a letter, you can put in a filing with that expense that you have incurred because it's a startup business. That you actually have these expenses. What that does is that it is carried forward to a loss to the next year. When revenue come now, you have that to offset against the revenue. So I would advise you to ensure that you're filing to stay compliant, because if you go to the tax office or try to get a tax compliance certificate, that's the first thing they're saying to you, you have not filed. So you have to have a filing status. So you'd file it anyway.
You have to reach out to Stephen and get everything aligned for sure. And then next question from Kayla Simon saying, can taking a taxi to a business location be considered a business expense?
Oh, of course. It's a traveling expense.
So see there, Kayla, see there. That's like easy, yes.
It's a traveling expense, and that is why you need your books and your records now, so that you know that even if I sign it yourself, you have your petty cash book. So I paid $2,000 on taxi. You write the $2,000 taxi fare from X to Z, and you sign it if needs be. You keep that in your record. It's a traveling expense, and right. It's allowable.
Allowable means I can use it to reduce my taxes.
It to reduce my taxes.
All right, so let's talk about, I know there have been some new tax updates, new tax laws coming out. What are some of these new laws that person should be thinking about right around now as with tax planning?
Okay, so one of the new things that they have, so we have to look at corporate clients versus individuals. Of course, everybody would have known the new, as of April 1, 2024, there's an increase in the income tax threshold to 1.7088. It's a new income tax threshold. And what that means is that anything above 1.7088, you are taxed at 25%. And then anything up to 6 million, over 6 million, you're taxed at 30%. Yeah. And that is why, Keisha, I would tell persons to move from sole proprietorship to a limited liability. The tax rates can go as far as 42%. While
sole traders?
For sole traders. So remember
Kimberly Johnson, sole trader. This was for you for a couple of years. Yes.
Exactly. So the sole proprietor, Keisha, or the individual can pay up to 42%. Remember, as a self-employed, 2.25% you have to pay for education tax, 3% NHT. So when you add that up to the 30% and the 30%, And also remember, as a sole proprietor, that the tax office is becoming even more stringent with the apportionment of expenses. So as a sole proprietor, you can't tell me, say, if the car not in the business name, that all expenses are wholly and exclusive for the business. They're taking 60-40. So be careful of how you have that. The other thing that is good for limited liability companies, of course, we have the corporate tax credit, which if you're below 500 million, you get back $375,000.
You get back money?
Yes, man. Meaning that it reduces your income tax liability. 375.
So I know that how many people are on where, you know, you say if you're earning less than 500 million in your business.
Yes. And you're a limited liability.
Most people on tonight. Nobody now talk it at the 500 million. No. So you're saying everybody listening then could be eligible for how much money?
For $375,000.
That goes towards how much taxes they have to pay. It's not
exactly. So it goes towards the taxes and it's not transferable. So you use it in that year. So Keisha, the amount of credits now, so that is something that is pretty new and other persons don't know about that. In addition to which there have been some revisions to the capital allowance that you get. Once you can prove that, that you have an equipment or anything used wholly and exclusively for the business, you can get a 15% annual return and a 25% initial allowance. So in that 1 year, your capital allowance you can reduce your taxes by 40%. Of course,
any equipment you're using in the business. So
right. So for us to assist you. So what we're doing now at KCLH, this is what we do. Even if you come with a cash register, there are certain tariff codes that are there, which KCLH has cracked the codes. We can't give them everything over there.
Some things can't talk on YouTube.
Some things can't.
It can't talk. So we're gonna drop back the form in the chat, please, guys. Because certain things can't talk on YouTube.
Exactly. So once it's machinery, you get the 40%, and we have the codes to back it up. And so that is also something new. There's been a shift with that. Most persons would be aware also of the employee tax credit. That is, if you're a limited liability company and you would have actually paid your taxes on time and in full by the 14th of each month. What the tax department does is that they give you a 30% reduction in either the lower of your income tax payable or the amount that all those amounts that you would have paid on time comes up to. That's a whole lot of money.
Money, that's what I was gonna say. Money.
That's a whole lot of money we can invest. That's a whole lot of money we can invest. So that is why the planning becomes so critical. When you look at that, you know, there are persons who do have to pay the tax, you know, with all these benefits, with all of these allowances that are afforded to you as a limited liability. Because once you have wholly and exclusive at KCLH, we help you classify the expenses.